Welcome back. You're watching Market Fatafat on ET now. Keeping it going with all the stocks that are buzzing in trade on the back of news flows and on technicals. Let's bring on board Amar Singh, Head Advisory at Angel One now on the technicals. Amar, good afternoon and thank you so much for joining in with us. Rane Madras, that's the first stock that you picked out for us, Amar. Trading at all-time high levels. What is the word that you have on Rane Madras? Should one start booking profits? Because last 1 year, 61% uptick is what we've seen for the stock. What is the word? Amar, I believe you're on mute.
Okay, sorry. If you look at Rane Madras, we are seeing that the stock is displaying a very strong bullish momentum, and also the stock has taken off after a lot of consolidation. The stock did dip towards as recent as in March. It had made a low of 631. Currently, it's almost 1014. And if you go back in time, the stock in 2018 had made a high of 1050. So that was the all-time high, and the way the structure of the stock is currently placed, and also what we are witnessing over the last few trading sessions, is that the volumes have been exceptionally high today and yesterday, and also earlier, also a few weeks back, there was significant volume. Post that, we had this breakout above the 900-950 level. So this is one stock one can keep a close watch on. Immediate target would be somewhere around 1045, 150. Sustaining above 1050, then the stock is going into a different trajectory altogether, but we'll have to wait for that. As far as immediate support for the stock comes, that's around 950, 970. So this is one stock one can definitely keep a close watch on.
Close eye on Rane Madras. Immediate target 145, 150, and then above that will be a different trajectory, but keep an eye out on that one. Let's move on, talk about Anupam Rasayan. That's a stock in focus on the back of its numbers. Weak set of numbers, one more chemical company. Nothing exciting that we've seen. So yes, revenues down by 37% on a quarter-on-quarter basis. Profits down by 87%, while margins also seeing a decline of around 260 basis points. So yes, look at the stock in the morning. We had seen a sharp decline there. Now recovered from the day's lowest point. What was interesting is when we spoke to the management, Vishal Thakkar, the deputy CFO of the company, he spoke about how recovery is possible in the second half of this year. So let's listen in to what he himself had to say in terms of what is the trajectory for the company going forward.
Yes, this quarter, as we had mentioned in the past also, that the first half of this year would look weak. And yes, this quarter's results have been in the similar range. We expect that by the year end, the growth should come back. So we expect that the H2 should be a growth pace, and the growth should come back in the H2. As coming to the FY25, we believe that on an overall H1 week, H2 growth back, we believe that the year number should be in a positive range in terms of growth. And in terms of margins, as we've been historically also guiding, which should be in the range of 26-27% EBITDA margin number. This quarter has been little weaker because of the lower volumes, but as we go, the year number should be in that range is what we would suggest.
Well, that's the word coming in from the management of Anupam Rasayan. But let's talk about technicals once again, Amar. And you've taken Senco Gold is the stock you've picked for us today. Last 6 months, 51% higher, and good numbers they reported yesterday as well. So the stock has been rallying since the last 2 days. So now, what's your call here? Are you penciling in any more upside on the charts?
Looking at Senco, what we did witness was that the stock in the last week of June had made a high of almost 1177, 1180 levels. And then it had corrected all the way towards 930. Again, it's back with a bang. And if you look at the volumes which the stock has been doing over the last few trading sessions, starting from 23rd of June, where there was a lot of interest, and in terms of the average daily volumes, if you look at over the last 20 days, that was significantly higher in terms of multiples. Lately also, the last couple of days, we've seen some very renewed interest in the stock, and the stock today hit a high of almost 1176. So it's very close to its crucial all-time highs. So I would say 1170, 1180, that's going to be a crucial zone of resistance for the stock. Having said that, if the stock is able to take out those levels, then we could witness a very sharp rally in the stock. So this is one stock, again, one can keep a close watch on and wait for a breakout above the 1170, 1180 levels.
cut about the 1170 levels is what one could watch out for from Senco Gold. Moving on, Jinay, Nazara Tech is the stock that you picked out for us. Numbers, how are they looking like?
Well, yes, so a mixed sort of numbers. If you look at revenue, it was subdued with a fall of about 1.7%, coming in at 250 crores versus 254 crores. If you talk about net profit, it did improve about 16%, coming in at 22.7 crores versus 19.5 crores year-on-year basis. But there was a poor show on operational performance. If you look at EBITDA, it fell by 24%, coming in at 25 crores versus 33 crores, and margins also contracted, coming in at 10% versus 13%. We did have the management earlier on 80 now, where they said that they have created a deal pipeline via acquisitions this year, and they're also looking at a right balance between profitability and growth. And going forward, they have targeted an EBITDA of about 300 crores in FY 2027, which will be led mainly by acquisitions. On the back of this, right now the stock is trading with the cuts of about 1%.
Okay, so that's the focus on Nazara, but let's move ahead, talk about Chennai Petro on the charts. And Amar, if I take a look at the last 6 months, not much happening. In fact, in the last month, it's a 10% cut coming in on the stock price. So do you think this dip that we did see is a chance to buy the stock, or what's your stance on this stock going ahead?
So if we look at Chennai Petro, clearly we are seeing a lot of moves there happening. And this week, the stock has bounced back. It's up by almost 7% or so. And if you ask me, that the stock had corrected almost from 1200 plus levels. So somewhere around 1275 on 16th of July. So the stock corrected all the way towards below sub 900 levels, and currently it's around 974. So these are very crucial levels for the stock, but one needs to remember here that this is one stock which is more from a trading play rather than any major up move, because what we are seeing structurally on the intermediate term trend is that really shows that there is consolidation. But since the stock is around very close and very strong support levels, so sustaining of the 975, 980 levels, the stock has the potential to rally towards 1100 odd levels. So this is one stock one can keep a close watch on.
Alright, so that's the view on Chennai Petro. Let's talk about SJVN, another earnings candidate buzzing in trade today. Revenue has come in at 870 crores versus 675, an uptick of 29% year on year. Net profit is also up 31.5% year on year. EBITDA also has seen quite the expansion at 33% higher, and EBITDA margins have also expanded to 76.7% versus 74.5% year on year. Now, other news flows other than earnings also to be spoken about, and the ones that you should focus on, they've accorded the in-principle approval for monetization through securitization of the partial future revenue and return on equity of the Nathpa Jhakri hydropower station of the company. And along with this, they've also approved the proposal for dilution of their stake in the wholly owned subsidiary SJVN Green Energy Limited. So two announcements and earnings, and on the back of all of these three factors, the stock is buzzing away 4.3% higher.
Okay, let's move on to the next one, and we have Marksans Pharma that's also in focus on the back of its earnings. And looking at the numbers that have come in, we're seeing an uptick of 18% in terms of the revenue. 591 crores is what the revenue of the company came in at. And look at the stock as of now, 14% up after its numbers yesterday. Profits of the company, 29.3% growth there. In terms of the margins, that's also seen an improvement of around 138 basis point to be precise. 21.7% is what the EBITDA margin has come in at versus 20.4% last year. So Marksans Pharma surely in focus after a great set of numbers that was reported by the company in Q1, almost trading at a couple of week high that we could see, and 14-15% uptick right now is quite a strong show coming in from the company.
Alright, but that was Marksans Pharma on the fundamental. Amar, you've also picked out Marksans Pharma on the technical. Now, if you see the last 1 year move, the stock has almost close to double. What's the view coming in? Are you seeing any sustenance to this rally? Do you think this is going to continue going ahead, or do you think now is time for some correction in the stock?
Oh no, if you look at the stock from a intermediate term perspective or from a long term perspective, there is no decline in momentum. So that clearly tells me that any pullback is a buying opportunity, and we've been positive on this stock for quite some time. Having said that, the stock made a high of 216, 217 recently, and again it's trying to breach those levels. So this level of 215 to 20 is something which is going to be very important, very crucial. And if it sustains above the 220 mark, then we could witness some real sharp rally in the stock. And because then the support for the stock would be below the 200 level, and the stock then would have a potential to rally towards 240 to 50 level. So this is one stock one should definitely keep a close watch on, provided it sustains above the 220 level on a sustained basis on decent volumes. You could witness a sharp rally because the structure of the chart, both from a long-term perspective as well as the intermediate-term perspective, there is no decline in momentum, and also the uptrend remains very strong.
Those levels over there for Marks and Pharma. But on that note, we're going to slip into a very short break. Don't go anywhere. More stocks after the break.
Hi there, welcome back. Still watching Market Fatafat on ET now. Let's keep it going with all the stocks that are making a buzz in today's trade. And Jinay, you've picked out a SAMIL for us. Earnings came out yesterday, but we do have commentary coming in from brokerages. So take us through what they're saying.
Well, as if you look at the earnings, then the revenue seen an uptick of about 28%, whereas PAT surged about 69%, coming in at 1,097 crores. Well, we have a note by JM Financials, who have maintained their buy rating with the target price of rupees 200. What they believe is that the LV, which is light vehicle sales, will be moderating going ahead, but the consumer electronics or aerospace segment is ready to pick up. Also, Red Sea issues have resulted into inventory buildup, is what company said. Because of the copper prices are softening, there has been a sharp increase in container cost, which will remain a challenge going ahead for the company, is what they have highlighted. Now, if we talk about their expansion plans, what they are confident about growth is they are expecting a capex guidance of about 5,000 crores for 19 greenfield expansions. Also, they're expecting majority of the non-automotive plant to operational by FY 2025 and FY 2026 itself, driving the growth for the company in future. And on the back of this, right now the stock is trading with the gains of 2.5%.
Okay, that is SAMIL in focus on the back of its earnings as well as brokerage. But let's move on. Amar, Titagarh Rail, that's the stock that you picked out for us. In the last 1 month, we've seen a bit of a correction coming in for the stock. Before that, obviously, we had seen that run up. So, is it an interesting time to re-enter Titagarh Rail?
Yeah, so if you look at this stock, what we witness is some very decent correction from almost 1900 levels to 1350. And the stock is in for consolidation, because if you look at the stock had a spectacular rally. It's been a multi-bagger. It's delivered phenomenal returns. So on the long-term charts, the trend still remains positive. Intermediate-term trend, we've seen some decline in momentum, and the stock is very close to its crucial support zone. So the recent lows of 1350, 1345, 1350, that should act as a very strong base for the stock, and there is a potential that we could witness some rally in the stock. So immediately the stock would run into some resistance around the 1460, 1470 level. That's a level to watch out for. Sustaining above that level, then the stock could rally towards 1580, 1600 levels. So since the stock is at very crucial support zone, there is a possibility that we could witness a pullback in the stock. So from that perspective, one can look at it. If you ask me the trend, the long-term trend though remains positive. The intermediate-term trend, we are seeing some sort of consolidation, some weakening in the intermediate-term trend. So that effectively tells me that even if there is a bounce back, it might not sustain.
Let's move on and talk about DVs. That's clearly under pressure today, and we're seeing a downtick of almost 3-4%. The last time I checked, it was in trade. As of now, also down almost 4%. Now, why is DVs in focus? Novartis has lost a bid to thwart the launch of MSN Entresto generic in the district court. This is in Delaware. The US district court has said that yes, they've ruled against the blocking MSN generic drug by Novartis. Now, why is DVs impacted? Because DVs is the CDMO contractor and manufacturer for Novartis for this drug, and in DV's overall sale, around 8% of this overall sale, the drug, and which is Entresto, contributed 8% of the overall sales for DVs, and in terms of the CDMO business of DVs also, it is 19%. So significant contribution that came in from this drug, and that is why DVs is in focus, down 4% in trade as of now, and clearly pressure is building in on the stock's name. 4,668 is what the stock is trading at.
Absolutely. Well, some cuts coming in on DV's lab, but let's also now go to Amar for his technical outlook on Uno Minda. Amar, you've picked up this stock for us. Last 6 months, well, 76% uptick coming in. Do you see this rally continuing, or are you penciling some kind of cool off on this stock now?
See, if you look at the stock from a long-term perspective, the trend is very strong, the momentum is there. On the intermediate term trend, we did witness the stock correct because if you look at the levels, so almost from 1200 levels, the stock corrected all the way towards 900. Now it's back to 1100 levels. So also what we are seeing on the short-term charts, we've seen some sort of bullish divergence on the short-term charts. So that tells me that the downside is definitely supported for the stock, and the stock has witnessed some decent volumes over the last few trading sessions. So specifically on the day when the stock had cracked and then from the lows of the day closed higher, that's on 5th of August, there the volumes were significantly higher, and today also the volumes are significantly higher as compared to the average of the last 7-8 trading sessions. So that effectively means is that there could be more upside to the stock, but again on the higher side it seems to be capped around the 1170, 1180 levels. So it's more from a trading perspective, very good stock from a trading perspective, 900 and 1200, that's the range for the stock. One can keep a close watch on this.
Okay, surely keeping an eye out on that one. But let's move on to an exclusive that we have, and this is indicating that your health insurance premiums could actually soon turn more expensive, and this is amid the new norms on reduction of waiting period and moratorium period that is there. Anurag is joining in with us to give us more details on that. Anurag, are we going to be paying a lot more in terms for our health insurance premium now?
So general insurance companies and standalone health insurers are all set to increase the health insurance premium by 7 to 10%, and policyholders will end up paying more for their Mediclaim coverage. There are two major reasons for the increase in health insurance premium. One is the few regulations, new master circular of IRDA which is getting implemented, which has made mandatory for insurance companies to reduce the moratorium period from 8 years to 5 years, and a reduction in waiting period also from 4 years to 3 years. So claim outgo will increase for the company, and the frequency of claim will also change. That is the reason the companies are going to take a hike in health insurance premium. The another one is the increase in medical inflation, the loss ratios related to the particular set of products, and the company's experience about the insurance policies. So these are the two main reasons. One on the regulatory front and another one on the experience front are the reasons for increase in the medical inflation. We have last week only reported that New India Assurance is going to increase on an average a 10% hike in their medical insurance premium. There are 9 insurance policies on which New India is going to take a hike, and other players are also following the same pattern, and the rate hike will be effective from the month of November or December, because there is a 90 days prior notice is also required to be given to the policy holder for their renewal. So 90 days period is required. So all insurance companies are also sending notices to their policy holder that there will be a revision going ahead. Other than that, one major change is happening. The pattern is changing. Till now, the price hike, the premium hike used to be in the brackets, but now onward the companies will taking a hike as per the yearly age figure. So there will be not a steep hike in the premium for the policy holders. For example, if someone is of age 32 years, for the 33 year the premium will change, but previously the bracket used to be from 30 to 35 and 35 to 40. So someone from 35 to 36 in the age bracket, they used to see the steep hike in the health insurance premium. And the new master circular which has mandated insurance companies to cover the pre-existing disease also, chronic disease also, a few genetic disorders also. So that all are the reasons, as per the sources companies are citing, that their claim outgo will change, the frequency of claim will change, and they are bound to increase. And medical inflation is also the one of the most important reason where companies are taking the premium hike in health insurance.
Okay, Anurag, thanks so much for joining us with all of those exclusive details. Sources say that health insurance premiums could go up, so we'll be looking forward to any announcement, and also keep a close eye on all the health insurance stocks as well. Moving on, let's keep it going with all the stocks. Let's talk about all cargo logistics. Very poor set of numbers coming in today's trade. Revenue came in at 3,813 crores versus 3,271, up 16.6%. But the net profit is the one that did not do well at all. It's come in at just 5.4 crore rupees compared to 122.6 crores, down more than 95% on a year-on-year basis. EBITDA also largely stable but down 4.5%, and EBITDA margin has contracted at 3.5% compared to 4.2%, down 77 bits on a year-on-year basis. So very poor set of numbers coming in, and on the back of that, the stock is the stock has recovered from the day's lowest point, but still continues to trade with a cut of 0.5%. But earlier in the day, we also caught up with the management of all cargo logistics. Let's hear out their take on the road ahead for the business.
The revenue has increased about 13% sequentially, but the EBITDA has increased almost 34%, which means that the margin has been improving. The way our business operates is, there's a strong operating leverage. Our costs need to be contained, which we have already been containing with all the initiatives that I spoke about. So entire growth in gross profit comes down to the bottom line, and that's been the strategy. How can we create operating leverage by making the organization more efficient? So that's something which should continue to kick in, and we believe that the revenue growth would outpace the SG&A cost by a good margin, and therefore that should result in improved margin sequentially. I mean, the visibility that we have right now, I would say the following quarter should all be sequentially improving from here on, like we have seen in this quarter.
Okay, and that was the last talk for today. So thank you so much, Rajesh, for joining in with us, as well as Amar for joining in with us on the technicals, and Jinay too from the research side. But with that, it's a goodbye from Tay, myself, as well as the team who put the show together. Enjoy your Independence Day tomorrow.